Hey everybody and welcome back to my channel. In this video today I'm going to share with you 5 tips that will help you to reduce losers when you are trading. Now these are going to be practical tips that you can implement straight away, and they're not going to be the basic tips that you always hear like remember to backtest and let your winners run. They're going to be real tips that will help you and assist you with your trading. If you're new to my channel, welcome. My name is Emily and on Mindfully Trading, I share my journey as I grow and develop as a trader. I've been trading now for over 5 years. I originally started day trading the stock market. Since then, I've gravitated towards day trading Forex, where I continue to trade in both my live account with IC markets, as well as my prop trading account with the prop firm, the 5%ers. If you're not sure what a prop firm is, it's where you trade a company's capital and you take a split of any profits that are made. Now, I'll talk more about this later in the video. If you want some more information, there is a link below in the description and also above. But without further ado, all of the software that I'll be using is linked in the description below. Remember to like and subscribe to the channel, and let's get straight into it. If you are going through a pretty bad streak, if you are experiencing quite a few losers, if you're not quite sure what's happening, my number one tip would be to reduce your position size, just to be able to get your emotions under control and be able to readjust and analyze and refocus. Now, if you're quite new to the concept of position sizing, there are a number of tools that you can use to assist you. Personally, I have a couple at my disposal. I use Magic Keys. This is a really useful keypad that helps you to calculate your position size for different markets. So I find this particularly useful if I am using different markets such as the SPY. But there are also free tools out there, my favorite one being the free tool that you can use from my FX book. It's on the screen in front of you, and I use this from the beginning with my trading just because it's free and it's simple. So for example, if you're trading pound dollar and you are using a pound account here, let's say that you have £1,000 and you are risking usually 1% per trade, taking on average a 20 pip position size, your usual lot size will be 0.07. However, if you are experiencing quite a lot of losers, if the market is currently in a pretty choppy phase and you want to just reduce your risk a little bit and half that, you can simply just reduce your risk from 1% per trade to 0.5%, and that will adjust your lot size here. Moving on to my second tip, and that is to trail profit stops. Now this can really help to ensure that the market doesn't turn against you, especially if it has been choppy and more unpredictable. And it can also ensure that you not only avoid losing, but manage to take some profit off the table as well. Just hopping back in time here to a trade that I took earlier this week on the Tuesday for pound dollar. And for this trade, I actually used this previous swing to calculate my fib tool. And it gave me these 3 areas of optimum trade entry. I took my position in the middle of this zone with a stop above the structure. Now usually I aim for a smaller 1.5R target, but for this trade I wanted to aim for a break of the swing, and I decided to aim for that little bit more at 3R, 3 times what I was risking for the trade. Now, as price pushed down into my profit, I actually trailed a tight profit stop here. And this was due to a number of reasons. I don't do this on every trade. It depends entirely on what the market is telling me. So what's the market telling me here? Well, it's telling me if I hover over that it is 3 o'clock in the afternoon. Now for me, utilizing time theory, 3 o'clock here GMT is coming up towards the end of the crossover session of America and London. And generally that's when I like to see a decision being made. Usually before 3, the market is figuring out which way it wants to go. But after 3, if we get a lot of momentum coming in like this, from my past experience, it's highly likely that we're going to see a follow through. So if price does not go down to my target here, then the chances are that it will reverse and it will most likely go up to my stop. So that is the main reason why I would trail a profit at this time. And the other reason being that we had these large candlesticks down, large momentum, and to me momentum shows strength, and that shows price is coming down. It's going to take some serious strength for that to turn before it hits my profit. And for those reasons alone, that's why I would trail a tight profit stop. For this, I started off going break even just before this large candlestick here, and then as price moved down, I basically trail it at a 1R amount. So once price moves down 15 pips, what I'm risking for the trade, I would then trail it to break even. As it moves down 30 pips, I would trail my profit to 15. And as it continued down past the 2R, which would be 30 pips profit, I would then trail my stop down with it. But as you can see on this occasion, it was very strong and it went straight down to my 3R target. Now I'm showing you this here in TradingView because I think it's a much easier platform to see and visualize, but the trade management aspect for my trading takes place in MetaTrader. As you can see here, this is the MetaTrader platform that I have for my account with the 5%ers. In fact, I am currently in a trade. I have literally just set this before I started recording and just got triggered really quite beautifully into this trade here. It's currently coming down. In fact, this is how I'm going to utilize a trailing stop right now in the live markets. And again, this is dependent entirely on this trade. So I need to take in the context of what's happening, what is happening with this trade. The main thing for me is it is coming up to the end of the London session. And today is actually a really big day because we've got NFP news release in the afternoon. So I wouldn't actually leave this trade running with room to move like I ordinarily would, because NFP is generally really choppy and it might go up to my stop. So with that being said, I will probably adjust a break-even stop on this trade, because if price decides to turn around and push up, it's going to be pushing up with momentum. It's going to be pushing up to retest the highs of the day, and I don't want that to continue up to my stop. So I will go to break even on that now. My next practical tip to help you to reduce your losses when you're trading is to refer to daily levels to help you when you are choosing a profit target. If you are a trader that tends to stick to a specific profit target, such as myself, I generally like to keep to a 1.5R target. That works great for day trading. However, sometimes it's possible to make more profit, but how do you know what is the right profit to aim for without getting too greedy? That's where the daily time frame comes in. It is a brilliant time frame because a lot of the larger institutions, banks, corporations all use the daily time frame, and it can provide us with a lot of information. For example, on this trade I showed you previously where I extended to 3R, ordinarily I would have aimed for half of that profit. I would have aimed for 1.5R, but I decided to extend it, and this was largely based from the daily time frame. So for example, let's just move, we're currently on the 3rd of September, let's move to the daily time frame to get an overall view of the market. And the most important thing is the current daily makeup. Previous day was in fact a little bullish doji candle, and the current day when I got into this trade, we had broken the prior daily low to that previous day. Where then would be a good place to aim for a target? Well, it would be for the next daily level, which would be looking at this level here, which in fact, as you can see, is where the current daily low dipped into. So as I extended my target from 1.5R to 3R, which was just before this next key daily level, price comes down and it triggers my order, giving me a nice target, a nice profit. But from then on, it actually reverses back up because it had reached that next key daily level. This is the importance of using daily levels in this way. They can provide us with a lot of information. They can help us to utilize entries, stops, and targets. My next practical tip for trading, and these are some really useful tips that you can't find most places, so I hope they are really helping you out. If they are, help me out in return by hitting that like button. My next tip is utilizing top-down analysis and time theory. I touched on this before in my previous tip. We're going to look at this in more detail right now. As you can see, the trade that I am currently in the live markets on pound dollar, I'm currently short. And the reason I trailed that stop loss that we did just moments before is partly from using top-down analysis and time theory. So let's start with top-down analysis. I have entered here on the 5-minute time frame, and that is a quick time frame. I'm looking for quick executions. I'm looking for quick movements. We got this big drop down here. So why then am I trailing my stop? Well, I'm going to refer back to the 4-hourly, and I'm also going to refer to time theory. Now, let's just hide all the detail right here so we can focus on the current candlestick. The current 4-hourly candlestick is still open. It hasn't closed yet, but there are 32 minutes left. I'm recording this at 9:30 GMT, and this candle will close in half an hour. And at the moment, we have had a nice push up tested the highs, it's come down, and it's currently underneath the candlestick's open. Now I want it to stay underneath that open to remain bearish so that price will continue down and hit my stop, my target. However, in the next 30 minutes, there's still a chance that price may decide to flip back up above the open, which is at 1.3178. And if it does that, because of the time theory, because it is coming up to the 4-hourly close, there's a high chance that if it gets above this open, it will continue on up. If it does that, then that will give it the strength to push back up and retest these highs, and it will most likely go to my stop. So this level here is the current 4-hourly candlestick open. I want it to remain underneath this level. As I said before, if it pushes past this level, it's probably going to keep on pushing up over the next 4-hourly period. And that is partly why I have decided to trail a tight break-even stop. I wouldn't do that on every trade. I am taking into account the current time period, what the next candlestick is saying. Why am I using the 4-hourly? Because it has a higher authority than the faster time frames, the 5-minute, the 15-minute, even the hourly. The 4-hourly is more similar to the daily, but it is an intraday time frame. So it's very unique and it's very helpful when we are setting stops and targets. Finally, my 5th tip, and this is another practical tip that I am currently incorporating in my live day trading right now as we speak, is to be aware of any upcoming news release. If you've not used it before, I have a fantastic resource that I like to use to keep an eye on the economic calendar, in particular for Forex, and that is forexfactory.com. Forexfactory.com is free and it's useful. It gives all the information that you need to be aware of what is going to happen in the markets. So at the moment, I'm currently recording this on Friday the 6th of September. Now I have this filtered, this little green flag here. I have it filtered on the high impact news and also just the currency pairs that I am interested in. But the main thing today for me at 1:30 GMT is the NFP news release for the dollar, non-farm employment change. Now this happens once a month, the first Friday of a new month, and it is usually a pretty significant news release because it can provide some pretty big moves. Doesn't always, so once again, don't ever expect a certain outcome from the market, but safe to say more often than not, you get some big moves from NFP. But what does this mean? Well, for me, it means that usually I wouldn't trade at all prior to NFP news release on that day. I've only taken this trade because it was a really nice setup, breaking this key daily level with a rejection here, a large bearish candlestick, and I just got in on this really nice retest. But because it's NFP, I have waited to get a sniper entry and I have already trailed a break-even stop. It's all about reducing your risk when there are factors out there that can affect your trading. So for me, obviously NFP is coming up. I don't want to stay in the market unnecessarily. This could mean not trading at all or just using really tight risk management. But there you have it. There are my 5 practical trading tips to help you to reduce losers when you are trading, which will ultimately increase your winners. Risk and reward. It is crucial for successful trading. I find that it's super important to incorporate these practical trading tips, especially trading a prop firm account where it is crucial to manage your risk and you've just got to be absolutely precise at making the best trading decisions. Otherwise, you will hit that max loss and you will fail your account. That's why I like to trade with the prop firm, the 5%ers, because I find their challenges to be best suited for my trading style. Not only that, they have realistic targets and they have fair rules to respect along the way. If you've not come across the 5%ers before, they have 3 different programs available for trading. They have high stakes, hyper growth and bootcamp. I'm currently enrolled in the hyper growth program, which really suits my goals when it comes to trading, aiming on A, quality setups, not aiming for an unrealistic get rich quick approach, but an approach that focuses on quality and making the best trading decisions and trusting that that will ensure you get to the destination that you are aiming for. What I also love about this program is that they have recently removed any deadline on the account, which means that you have an unlimited amount of time to pass the challenge. This is a big game changer in the prop firm industry. If you would like some more information, I have created a separate video that gives a full review of the hypergrowth program, and I've also got a link to them in the description below, so make sure you check that out. There we go. My best part of trading, when it hits your take profit. I hope that you've enjoyed this video. Please remember to like and subscribe to the channel. Let me know any questions in the comments below, and I'll catch you in my next video. Bye.